What's going on, guys? Billy here from Storm Trades with another trade recap. Today, we're going to run through my NQ futures long trade that I took on Friday, July 18th during the AM New York trading session. This trade recap is a really good example of having a very clear bias, an hourly market structure narrative that went along with that bias, and a nice M5 execution time frame entry model. And then price went against us, right? So we took a business expense because after all, price will do whatever it wants, whenever it wants. Our conviction be damned. So let's try and learn from it. Let's get right into it. All right, starting off on the daily time frame, look at the last 4 daily candles here on the screen. I set up my charts on the daily the same way every day, and I do that so that I have a very simple and repeatable process that I can garner a daily bias from. Now, if it's not clear to me, I don't have a daily bias, it's just neutral, okay? So first things first, as you will probably notice every time you watch one of these, is I set up the previous daily low, previous daily high, and I run a fib from the previous daily candle. Now, I've been learning a lot more about this from watching T-Trades, and from how I understand it, and it makes total sense, right? Since ever since we swept down here below, right here, we had a liquidity raid. We had a very strong bullish close on Thursday, right? So we would expect price to continue. And if we would expect price to continue, this would be a continuation day, we actually would want to see price stay up here, right? So we'd want to see the wick form within this upper quadrant of the previous daily candle's midpoint, okay? And so therefore, I was actually looking for higher prices. This made a ton of sense to me, right? We swept here. We've created a reversal, right? You cannot have a reversal without a swing point. We've created the swing point here. We closed very bullish. I'm expecting price to continue higher. And we actually have all-time highs up here. We just keep making all-time highs. Pretty unbelievable. All right, so once I have my daily bias, I'm going to immediately move down to the hourly time frame. And on the hourly time frame, especially on a Friday, it's kind of easy to see order flow throughout the week, right? As you can sort of see, starting Monday, right, we've been going higher. Right? We had a bit of a reversal here on Tuesday into a manipulation, and we've just been moving higher ever since Thursday. That said, we want to pair up this liquidity raid with some sort of a change in the state of delivery that would indicate the most recent change in the state of delivery. And we actually have that right here, okay? Now, looking back at this, I don't know if it would have been better to run a fib from this large down close candle. I did, in fact, run it from the swing low to the swing high. I don't think running a fib has anything to do with a trade working out, but it probably gave me a little more confidence that we had a lot more room to run. But I also combined that with the ADR level, which we had just swept, okay? Which you know how I like to search for reversals around that 1/3 ADR, and then to use it as a draw on liquidity. So anyway, I did run a fib here and saw that we had a lot of room even up to the low-hanging fruit, which is the -1 and -1.5, and that coincided with the 1/3 ADR. This all gave me confidence that, in fact, we would start turning around price right here. But also want to just make note, whenever we're in a bullish market structure and order flow, especially bullish, down close candles will get bought up and closed above. So just marking out an order block there. This doesn't really mean much other than it's just confirming the narrative that I'm watching play out. Now, remember, we always confirm a change in state of delivery if we can by the presence of a fair value gap that indicates a displacement through it and really sort of tips its hat that we're on sides with some sort of a move in the opposite direction. And I just want to make note that I'm talking about this hourly fair value gap right here. Okay. Now, where is price currently located? Right. As you watch my videos, you know that I requiring some sort of a POI sweep or to be delivering out of some sort of hourly fair value gap or hourly bearish, in this case, bearish hourly swing low, right? So we have had a swing low, swept here into a bullish hourly fair value gap. I am expecting price to move from this zone, and from here, I'm actually able to go ahead and start looking for trades, right? So I've already established one of my requirements, which is a trade into a hourly POI. Now I'm going to dip down to the M5 time frame, and I am actually looking to take price back up here to all-time highs. All right, so moving down to the M5. Now on the M5, I am looking for some sort of a sweep of liquidity and then a move back up into the range. In this case, because I'm looking for bullish entry model. I'll just make note here that this is us dipping into the POI. Okay, now there's no structure here. Okay, look, this is the change in state delivery at this point would be all the way up here. So I am actually watching price here. I want to see one more sort of a move. If you can notice here, we swept the 138 ER. I'd love to see that. The body's almost respecting it completely. So I'm just going to move price forward here, see if we get another sweep. Now, at this point, and you're going to see this later, at this point on the pair that I'm trading the MNQ. Okay, now on MNQ, this 11 o'clock candle swept the 1025. Okay, just keep that in mind, and I'll show you. Okay, so it was a perfect looking setup. Okay, and we'll get back to what we could have done differently in terms of analyzing the market, but I'm going to show you. But this 11 o'clock candle was a nice sweep of the 1025, therefore allowing us to mark this out as a well, this would have been the change in state delivery. All right. But just for future reference, we will note that on the actual mini contract, there was a relatively equal lows there. Obviously, would have liked to have seen that, but on my charts, I have the M5 pulled up on my the actual contract that I'm going to be trading, and so it was on the MNQ. It's not really an excuse, just something I'm looking back on it. I couldn't believe I missed it. So from here. Okay, I was going to wait for price to move up and close above that change in state of delivery, and I would get involved with a trade on a market order as soon as we get that, which we did on this very next candle. And I'll put in a buy order here and a stop at this swing low right here. Okay, this is a protected swing low right there. I could have gone lower. It wouldn't have mattered. Okay, as you'll see here in a second. Take profit 2R, and let's watch price. It's going to seem very simple to you that we got stopped out. Look, we would have got stopped out in here. Relative equal lows. Hello. That's on me for not watching that. Are there other reasons why this wouldn't have worked? Yeah, I mean, on the hourly, we had already taken the previous daily high. It's not really, in the grand scheme of things, that big of a deal if we're going to be super bullish. Had I changed the standard deviation, that wouldn't have done anything. I mean, I still wanted to be on sides on longs here. Let me just show you on the NQ, on the MNQ here. Wow, we did actually sweep right here. Do that. I'll actually swap that. So, all right. Anyway, I hope you guys got something out of that. Well, there we go. Hope you guys have a great weekend, and hopefully we can always learn. For me, this was learning that I really need to be paying attention to the mini contract for liquidity, because the mini contract is actually the one that's getting most of the data, and the micro contract is sort of piggybacking off that data, but it doesn't always mirror it. So, all right, you guys got anything out of this at all? I really appreciate you watching all the way through. If you could like, subscribe, make a comment, I really appreciate all of that. And you guys have a great weekend. Bye-bye.